what is needed to deliver an award-winning multi-asset capability. Joining me today to discuss PSG Asset Management multi-asset capability is Head of Equities and Fund Manager of the PSG Balanced Fund, Justin Fleur. So Justin, to kick us off, can you maybe remind us what exactly do we mean when we talk about the multi-asset capability or fund, and what role does that fulfill, or what client need does that address in a portfolio?
Sure, Audrey. Really good to be with you here today. So multi-asset funds are very simple. They've actually gone very, very old. They've been around a long time, and they do something really important. What they do is they combine a lot of different asset classes in a single portfolio in order to meet a client objective or client solution. So really what it is a diversified fund. It's got equities in it. It's got bonds, it's got cash, it might have a little bit of property from time to time, and you can diversify across countries as well and across currencies. And the reason it's important is because, coming back to the objective at the end of the day, is we're trying to deliver capital growth for investors. A lot of investors are facing this twin dilemma of inflation and longevity. They're living longer, and inflation's eating away at their capital. So we need to be able to deliver capital growth for them to secure a good retirement. But we need to do it in a way that keeps them invested and is appropriately matched to the risk tolerance that is needed as well. That's where multi-asset funds come in. It blends that growth and that capital return potential, but it does it in a way that's at a lower risk than a pure equity fund.
So it sounds like you're bringing together quite a few different things. So what are the elements that's needed to deliver a good multi-asset capability?
Yeah. So multi-asset is really where everything comes together. It really stands at that intersection of a number of things, and you need to be solid in all of them. So the key ones is you need to have decent capability in each of the asset classes, so each of the building blocks that you're using. So in our life, that would be local equities. So you need to be good at generating alpha and returns in local equities, global equities as well. Some of the other asset classes you might use from time to time, like property. And very importantly, your fixed income and cash and enhanced cash proposition needs to be very solid as well. So that's effectively that's probably one of the most important pieces is your fundamental building block alpha needs to be there. Then what you need to be able to do is assess the overarching environment matching to the objectives of the fund and bring it all together. So this is where what we call portfolio construction becomes really important. So that's another skill set and capability you need. And within that, it includes things like asset allocation, dynamic asset allocation. How do you tilt your asset allocation from equities into cash or into bonds at the right time? How do you go onshore, offshore? Make sure that you're doing the best you can over there. So that's a very important capability. And I think you need all of those working really well to deliver what's on the tin at the end of the day.
Many multi-asset funds are Regulation 28 compliant, meaning that they can be used in pre-retirement savings vehicles. It also means that they can have a substantial portion of their portfolio allocated to offshore assets, these days up to 45%. Now, a key point of debate is how to manage that offshore component and whether South African managers are equipped to add value to clients. Can you maybe give us PSG Asset Management's perspective and how they add value?
Sure. Yeah, Audrey, so this is really important. So, our opinion is having a global capability is going to be very important in managing any multi-asset fund really well. And that's for a number of reasons. So one is our South African market is probably too small and your opportunity set too narrow. It doesn't give you enough diversification if that's all you're doing. So, or put differently, you're getting a huge diversification benefit by being able to look for opportunities offshore and then putting them alongside the opportunities we find here. So we do see that you need both. So the question then becomes, so the debate is not do you have offshore or not, the debate is how do you go about executing on that? And that's where the debate is quite loud at the moment. So, where we would be, we'd make a couple of points. Number one is we'd say, I think a lot of viewers would be surprised at how globally integrated our our JSE is already anyway. So the JSE is chock full of global companies. You've got companies here that have nothing to do with South Africa. And if you want to be a good domestic fund manager, you have to have a good global perspective anyway. All right. So you need to be looking at their regulation, at the political environment that they're in, at their competitors. So the good fund managers in South Africa have that global perspective already, right? So for us, it's not a stretch to say, well, then let's extend it one step further and look for good global ideas that we can bring into our multi-asset portfolios that'll complement what we have domestically and give a good risk-adjusted solution. And there we think South African managers can do a pretty good job. Maybe not everyone, but we've certainly been doing this since 2008, and we've had an enormous amount of value created by our offshore component that we manage right here from Cape Town. So if I kind of address some of the concerns, maybe, what are the reasons that people say you have to go to big offshore managers? People often talk about resourcing and size. And what we're seeing is with the rise of technology these days, a lot of that differential is closing very, very quickly. So with a reasonably small team, you can cover a lot very quickly. You don't need thousands of analysts anymore. So that's a very, very important point, is technologies really come to our assistance. And then the other thing I'll say is that the world we're going into, as we see particularly the US and the world changing from a geopolitical perspective, it's looking a lot more chaotic, a lot more unpredictable. Our judgment on this is that emerging market investors are actually going to have the advantage. This is what we've grown up on. Inflation, unpredictable politics, unpredictable political leaders. This isn't new to us. This is what we've had from day one, right? So I actually think being in South Africa, being outside of the general buzz of the big financial centers can be an advantage as well. And we seek to use it. So for us, it's really about getting the best of both. We use technology to get the information that we need, and then we use the fact that we're a little bit more distant. We can think a little bit more clearly and independently, and that we're equipped with an emerging market complexity and chaos mindset, which I think is very fit for purpose in this environment. So if I kind of bring it together, I think you have to have a global capability, and there are enormous advantages about integrating that into a multi-asset process. I think outsourcing your global capability comes with some challenges, and I'll just point to a few of the challenges. One is you don't get that like-for-like integration. You're just kind of squashing funds together. And there can be overlooked risks and inefficiencies when you do that. And there's a lot of benefits about doing it yourself on a stock-by-stock level. And a good example for that is substitution. So say, for example, just as an example, you're constructive on the oil and gas sector, and you want that in your portfolio. Traditionally, the only way you could play that as a South African manager was through Sasol. Now, if you're a globally integrated manager like we are, we don't have to do that. We can substitute Sasol for something else. So we can go offshore. We can look at Shell as an example, which has been our primary substitute, and then bring that in. You get the portfolio benefits, but with much better risk-adjusted returns. And I think you're going to see more and more of that. So we think this is important. We think very strongly that there are some South African managers that can and will do this well. And we do think we are one of them.
So Justin, talking about complexity and the increasingly complex, volatile environment that we're seeing around us today, do you think that multi-asset funds and the way they've been managed traditionally, is that still viable going forward? And what should we be looking for when it comes to assessing a multi-asset fund?
Sure. Yeah, so if I just look at what's been done traditionally to start with. So think about what your traditional multi-asset fund, a lot of it was encapsulated in this concept of 60-40 portfolios. So fairly static and not that dynamic. So what investors would do is they would model some sort of strategic asset allocation, so a grouping of asset weights that were a function of historical returns and relationships. Okay, so it's very much embedding typically what happened in the last 10 to 15 years. And that then comes out as a recommended asset allocation model, which then a lot of investors would kind of adhere to quite statically. Maybe they would tactically drift up or down around that, but that would kind of be their guiding light. For the environment that we're going into, we think that's potentially quite a dangerous and outdated approach. We think you have to be much more dynamic and forward-looking. And in many cases, these backward-looking data sets informing your strategic asset allocation is a very dangerous way to do things. So for us, it's very much about thinking independently, recognizing that there's a lot has changed. And a good example is the historical relationship between global bonds and equities. For the last 10 to 15 years, you've had this beautiful negative correlation. So when equities have done poorly, typically bonds have performed well, and you've had this nice offset in your portfolio, and vice versa. We're not seeing that anymore. There's been a number of reasons for that. I think the world is losing a bit of confidence in the US and the US financial system, and they're very indebted. So developed market bonds are behaving much more like risk assets than defense assets. And I think, therefore, as a multi-asset fund manager, what you need to be doing is thinking quite creatively about where you're finding these risk absorbing assets in your portfolio. So so I think that's just one example. So I think you got to be thinking quite differently. And I made the point earlier about thinking like an emerging market manager, and I think that's really the environment we're in. Is take nothing for granted, be prepared for unpredictability. There's a lot of opportunity there. But don't just assume everything's going to be the same as it was in the last 10 to 15 years, because it's probably not.
Justin, thank you so much for joining me today and giving us that forward look into the management of multi-asset funds.
Thanks, Audrey. Pleasure.